Hello ladies and gentlemen, and welcome back. Well, nobody said 2022 was going to be easy in markets. It may be the year of the trader, but at the same time, you have to be able to navigate these very murky waters. So at the moment, we find ourselves near the lows. We actually made a new low on the real market in the last 24 hours, but what's underneath the hood may surprise you in terms of the futures action. We saw some wicks, we saw some buying into the close. Is it enough to actually push this market back up? And then if it does push up, do we go back to mean reversion? This is something that's incredibly common throughout market sell-offs, and we have had it happen over the previous periods of 2022 so far. So is the market going to find some reprieve, find some safety for the next couple of sessions? Or is it about to just get wild and push really far down in what is a capitulation move ahead of October? Stay tuned as we uncover, hopefully, what's going to happen in the markets over the next couple of sessions. Stay tuned, guys. This will be a good one. Well, welcome back everybody to what looks like the big short in markets right now. And we'll be going through, of course, stocks, commodities, and cryptos today, the macro data, the news headlines, the lead indicators, and of course, the charts later on. S&P 500 futures net positioning is firmly bearish. Now, this was a stat taken from a few weeks ago, but I can tell you it's even lower at this stage in terms of the amounts of shorts out there in the market. And the reason I want to bring it up is because when we see shorts hit some of these levels, it can often mean that the market is close to lows, at least temporarily, or it's very, very likely that there is a buyer ready to squeeze some of these shorts in the markets. Think of it as too many people are fearful right now, and that usually is a decent sign. Remember, Warren Buffett always goes with when there's fear, you want to be looking at by being greedy, and of course, when there's greed, you want to be looking at being fearful, just to summarize his quote. Now, in terms of fear and greed indexes, what's going on right now? Extreme fear. I think we've seen this reading as low as 11, and this takes into a whole bunch of accounts of pretty much different lead indicators that can show us things like breadth and momentum and other things in markets. We're also seeing just negative news everywhere, and it's incredibly easy to be negative right now. Apple stocks just got downgraded by Bank of America. They say it's no longer a safe haven. We've also seen Apple come out with a warning that they are not ramping production for their iPhone 14 demand, which is a little bit low. I guess that's not really a surprise to anyone though. I remember the Federal Reserve is trying to lower demand across the board, and maybe that's a good sign realistically. Yeah, bad news is good news. In the jobs number that we're going to see come out next week, which is going to be a big one, non-farm payrolls, remember that on the Friday, first Friday of every month. Will the number get worse? That's actually what the market will want to see. A worse number, a cooling economy, and realistically then, hopefully, that means the Federal Reserve's giant inflation hits, which have been these huge interest rate hikes, are doing some work. Do keep this data in this date in, of course, your calendar, October 16th. Not enough people are talking about it. We're seeing lockdowns in China. That's going to hurt the supply side. Remember, China's a huge part of the supply equation when we're talking about the world and inflation. And they're in lockdown now into Golden Week in some of the provinces. That's not a good thing. We don't want it to continue. Hope in October. Bounces after bad Septembers are possible when we have horror show Septembers. And guess what? We have a horror show September at this stage. Now, there is one big outlier here, and a lot of you are going to say, well, we're most correlated to 2008 right now, so that means October is going to be horrific. Yep, but we need to keep an open mind to the stats. And the stats say that if you have a horrible September, often October has some reprieve in it. Also remember that 2022 has been one of the worst years ever in terms of, well, pretty much it is realistically here, in terms of bullish days throughout the year. 44.1%. The average stat, I believe, is 59% bullish, just so you can remember that in normal times. And look at this, a horrific year. You're going through history, guys, in the making of what 2022 will be written down. People will study this year. They'll want to understand it in the future. That's the one thing I always find interesting about markets is there's always something exciting happening. There's always another opportunity. You don't need to feel FOMO or regret or anything like that. There will be another opportunity on the horizon at some point. So investors are clamoring for news about the US dollar. This is a story we reported on in the last video, but I just want to bring it back up because it's already starting to occur. we're seeing the US dollar weaken. And that's certainly something that was very right in the previous video. We talked about the US dollar weakening, the strength in gold, the strength in currencies, and it certainly did happen. When we've had readings like these huge extreme trend deviations from the mean, we've tended to have a month of weakness in that particular pair. And this has been the US dollar 33% of the time. 1 week later, it was positive. Then it was 17 and 17. That's a damning statistic. Very, very bad. Here's some other asset classes after that number was given. And overall, the reason that we're talking about even the potential here of bullishness in the US stock market is really the time of year we're in. Now, during most Octobers, hey, I'd say, you know what? More badness to come. Though you do usually see the turn here at the end, even during other years, you see the turn here at the end of October or end of September into October. But take a look here at midterm years. You know, the stat is undeniably very bullish over the October period. Will it be so again? And then 2023 brings the pain train. Well, we'll find out. Realistically, I think longs will be met by short positions, but we need to be very, very careful. We'll look at the structure a little bit later on in today's video. 200 plus years of bear market data. Pause the video if you're interested. I'm still leaving that there so you guys can see it. So before we jump into the charts and we go any further, I want to talk about the sponsor of today's video, which is Tiger Brokers. And you've seen me bring this one up before, but what greater time for me to discuss the sectors in the market. Now, if we go to the 10-day, what you'll notice is there is very little positivity in the markets over the last 10 days. But pharmacy, biotech, home improvements are some of the standouts in terms of the more bullish looking sectors. You can go to the 5-day and you'll notice that biotech and of course pharmacy and home improvement have also been very strong over the 5 days. And as a percentage change, even in the last 24 hours of pretty horrific sell-offs, these areas have in general held a little bit better than the market themselves. What this shows you is often rotation. And we talk about rotation throughout markets quite a lot. And it's very important to understand the sectors and the industries and those types of things. Now, here's the cool feature. If I click on one of these, it brings up all the stocks within that sector. So I can then rank them, have a look at them, go over to industry as well, and look at some of the concepts in those. You can also do a percentage change over 5 days or 20 days. So we can go here and we can see which sectors have been purchased the most and which ones have been purchased the least. So if you were holding positions over the last 20 days, it seems to be silver and gold and more defensive sectors that are doing well. Whereas if you were thinking, what is the worst sector at the moment? Well, it's aluminium. Aluminium is very bad. Maybe you want to go look at some of those stocks. Are they hitting into key supports? This can all be done within the Tiger Brokers platform. And do remember for the Australian audience out there that this is the last day to claim your 50 zip stock. Usually it's 20. It's extra 30 for being a member of the FX Evolution community. All you have to do is open an account and fund it with 1 cent or more, I believe. Look at the terms and conditions down below, and that extra 30 stocks will be applied to your account manually over the next couple of weeks. You'll get the 20 very, very quickly. So a special thank you to Tiger Brokers out there for sponsoring today's video. But if you want those extra zip stocks, you've got to do it right now today. And the good thing is this broker opens accounts fast, guys. So you should be able to do it. Good luck and thank you so much. But let's look at some exhibits in terms of the bullish and bearish metrics coming out of this market. So the first one is, of course, something we've talked about before, the percentage of the SP 500 stocks above the 200-day moving average. It's bad. It's really bad. It's right down. And you'll notice that this coincides often with capitulation lows. Now, there was one period where we made a new low back in 2016, which is a correlated market to the current position, and we hit down in these levels, and then we saw that bounce. What the importance of this area is often it can be hallmarked with lows or extreme points in markets, and it's something that we should keep in mind. What about the VIX? What about the extreme levels of the VIX? Well, the VIX hit 35 in the previous session, and then it's bounced off that and come back down. So realistically, the volatility index has mostly declined and it's already hit a very decent period. Now, it hasn't hit what we call capitulation. That would be like a 45 plus reading on the VIX. And that's actually what we're looking for ideally to show us a real bottom is in this market that could be considered, maybe potentially investable or something like that. because these types of fear spikes are what you're generally looking for. They've been synonymous with lows in markets. These other ones have been synonymous with just extreme zones, and of course, to be cautious on the bearish moves after this point. We've talked about that a few times. Let's have a look at yields. What are yields telling us? Not too much. They obviously dropped below that last kind of break over here, the last trough that has been broken through, and markets have recovered a little bit, but mostly they're just kind of hovering sideways in the yield story. The one you want to be looking at is a drop in the 2-year though. This is very much linked with the SP 500. If you don't believe me, load an SPX on the chart or a SPY on the chart and have a look at the performance over time versus it. It's a very interesting chart to watch, and this year is all about yields. So what about bonds? Well, I'm first to tell you here that during the previous session, the lead bond indicator that I have was horrific. I mean horrific. It was bad. It was like dumping. But by the end of the day, it had actually recovered all of that dump. So it actually had gone right back up, which is very interesting. Of course, here, high yields had already predicted much before the market made the new low that a new low was coming. So high yields are currently holding. Corporate bonds are currently holding these lows. So the market is kind of saying, well, you know, maybe I'm just chilling. Remember, only literally a day ago, if that had closed on the low, I'd say, well, maybe there's a lot worse to come, but it did reject. We got to an extreme sell, and then all of a sudden we saw a massive amount of demand coming back in. Does that bode well for the markets over this shorter period? We'll, of course, look at the charts very, very soon. TLT, which is, of course, the 20-year treasury bonds, they've been pretty good so far. I do think that they're helped a lot by realistically what the Bank of England's done, jumping in and doing a bit more QE and getting involved in these markets. That has been a helping factor, I believe, to that trade. But let's move over to the dollar index. This is where the last video was pretty correct. The market did recover, the market then sold off, and we saw a big sell on the US dollar, which of course helped a whole bunch of currency trades out there, gold, and some other things. So where is the US dollar going to next? Well, it still looks like now it's probably going to be weak for a little period, and I would like to see it back down in these 110.50 areas. How it gets there could be a little bit random, but US dollar does look like it's temporarily weak. Do not discount it. Do not believe that, oh, this is the end of the US dollar or anything like that. Maybe today's close, or the Friday close, is going to be very, very important here. But you can see this big rejection wick that's currently sitting, and if it does close like that, effectively, it's showing us that there's a lot of supply and that this is an extended market. If you put a 20 moving average on this, in fact, we'll just do it now, just so you can see how far away it is from mean reversion. It's pretty horrific. And this is a 9 moving average, and you can see it's far away. It has been the trade that everyone has talked about. And I don't blame everyone. Of course, it's a massive trade, and it's done incredibly well. But we did just see over the last previous video, we saw the first turnaround sign. Now, the US dollar or the dollar index does love some 20 moving average action. Here's the weekly. It's touched it a few times. Let's have a look at the daily though, so we can see the interaction with it. This would correspond very nicely with the box, and that's why I wanted to put it on. So you've got that previous demand, and you've also got a 20 moving average. Yep, that would be quite nice. And I think, the market's due for a bit of a correction here in this particular pair. What do you think in the comments down below, though? Are you just absolutely bullish on the US dollar and you don't want to go anywhere against it? Fair enough, but we did see the turn on the top end. Let's have a look at the euro. That's usually the proxy towards it. If we look at the euro, we're in a little bit of structure. I could see some weakness here in the euro and then potentially some strength coming back through after that. Aims, of course, for up here, and what you'll find is that this level will correspond very well with the dollar index hitting that demand zone. Remember, if you don't know how to trade the dollar index, if you don't have those futures contracts, potentially the euro is a good proxy. It's the most correlated with the US dollar index. Now let's move over to gold. What did it do? Well, gold pulled back, like we were discussing, and then, of course, it found some buyers. We're now on a new peak, which is a good sign. I'd like to see it go back into this supply up here, and we've had that one there for a while, that 1670 to 1675 alert. So somewhere in here, ideally gold would find weakness. And that's what you're kind of looking for across these markets. You want to see some recovery because they've been so aggressive on the short. And then ideally you get into shorts at the key levels of supply demand and the key levels of market structure. Gold is getting close to one of those zones. What about oil? Well, oil has come off the previous support. So here's the supports, which could equal resistance. If oil breaks underneath, and I'll just pop this on the chart, around this 80.33, then that could bode kind of poorly, I guess, for the markets over the next little period. And what you'd be looking for there is a small pullback and then potentially a little sell back down into maybe around that 78 zone. So watch oil. 80.33 is a key level that I'll be watching for the break. And I'd like to see the market then pull back and potentially place some shorts. If it just keeps finding demand here, then the next big area is going to be in this wick, which is somewhere around that 85.20 zone. So that's going to be an area to watch, and certainly some nice little potential trades there on oil. My overall net kind of case on oil, though, is still bearish over the medium to long term. I'm looking for that 65 a barrel. Will we get there? Yeah, I hope so. And I think it's very, very possible. Let's move over to Tesla. Now, Tesla had a shocking session. It lost 7% almost there by the end of the day. And it was back down on its knees. And I'm talking serious lows. We were back all the way to that level that we've been discussing for a while, which is the demand zone. If we get underneath here, bad things could happen. In the next 24 hours, you'd kind of hope towards the bullishness. If the market gets underneath this level, you want instant buyers, guys. I don't want to see like, oh, yeah, there. No, I want to see instant buyers coming in within an hour, within 2 hours of that low, buying up and showing that, yes, you might sweep the low, but you've found demand instantaneously underneath that. This is an interesting one. It's like the last kind of stock that hasn't broken through. If this closes below, you'd have to think longer term. We're going towards, at least this gap fill here, if not back into the lows of 220. Be careful here in Tesla. The next 24 hours could be a very interesting chart though to watch. You'll notice I've got the little alert sitting underneath here. We'll find out whether it can make that new low. Now, the big stock. This is the one that usually breaks the camel's back. Apple is under massive attack, 5% with the downgrade. This is probably what's hurting the market the most, really. The Apple 5% down day is pretty horrific. You've got a massive stock going down heavily. Does it find some reprieve? Well, there's going to be buyers, you would think, for Apple stock. Look at the volumes here, big volumes over the last 2 days. It's not really anywhere in particular. It closed at this little kind of, you would say, like turn. I don't really like looking at this chart too much. The only way you're looking at it now is realistically longer term bearish. But do we get some reprieve in the overall market? Let's look at the SP 500 and some of the other leads. First up, exhibit case 1, which is semiconductors. We've hit the 200 moving average again on the weekly, and we've found some form of buyers. This, again, a new low. Not really what you want to see, but there were some buyers at the end of the day. The wick came back up. Could this be a little false break? It kind of looks like it could be. I'd want to see Friday bullish here in this case. Otherwise, I think worse things to come. Let's have a look over here for XLK, another one. Yes, there were some buyers near the close of the day, but let's go and have a look, which is important. You've got to consider those. Again, through the lows here, it's tough not to think about this as negative. Do notice though, big gaps left, big gaps. And that's something we'll look at when we look at the S&P 500. So XLK, semiconductors, both look pretty horrific. Here's the other story, the UK 100. Now this one is pretty wild. We have found 1, 2, 3, 4, 5, and multiple wick purchases off this zone. Now, this is where things get really interesting because this is an incredible demand area. That's 5+ spikes, not including the amount of times it's tapped this area in between these big major spikes. If this falls over, is this like some giant Wyckoff that then just, really destroys a market like this? Of course, we know that the Bank of England's stepping in. We know that There's a lot of trades in this one, and I'm not bullish on the FTSE myself because there's so much commodities and financials in it. I really think the FTSE may struggle over the next 12 months, but we are on the demand. If it's going to do it, if it's going to find buyers, it kind of needs to do so very, very soon. The DAX has already fallen through, possibly the worst European country in terms of the effect that's happening due to everything that's going on in the world. You can see the big volume spikes here. In general, it is being met with some bullishness. Again, we cannot discount these wicks. Where there's wicks, there's often bases. And in this case, we do have some wicks. We've got 1 wick, 2 wicks, and 3 wicks. Someone's buying. Who? Is it the composite man? Is it someone that's smart and knows what's going on? Or is it just a bunch of dumbasses like maybe some of us are, and we're ready to, we're just YOLOing in trying to get that action? Well, we don't know exactly who it is, but if you wanted to wait for confirmations, of course, you want to see this market back above that 12,400, along with the SP 500 breaking through again that 3720, 3730 zone. Let's talk about the SP 500 though. First up, 20 moving average, decently far away from it, statistically more likely to mean revert. I think the downside, while it is there, and of course you can make some big arguments for it, it just looks kind of, like I said in the last 24-hour trade, I feel like there are some buyers here. It's just sneaky business. It's sneaky kangaroo marketing. Now, we've got some wicks coming off the lows. I mean, that's technically a small tick. We're far away from the 20, and we've come down very aggressively, leaving some gaps behind. Well, that gives us openings to say, well, we've left some gaps. Maybe we want to come fill these. It reminds me a little bit of this situation over here back in June, except that was even more brutal in terms of the movements. Let's have a look at the 1 hour. So, of course, we ended the day on a shooting star. We expected the market to come down. Admittedly, I thought we'd find buyers in here. So this is where I thought we'd find buyers, around that 3650, 3640 zone. We are there by the close, but it went lower. And that's the thing that's interesting. Markets often put the fear on before they do turn. Was that the fear circus, or is there a little bit more? Let's now take a look at some gap closes. So here we have the gap close 37.17. Then we have another one sitting at 37.57. So we've got two pretty close gap changes, some fairly decent inefficiencies here in the market that we could move towards. Let's have a look at the futures market before we grab into some others. So again, wicks coming off the low. And this is why I said that the futures hold some interesting information. Notice that the futures didn't make a new low. We'd already seen the fear during the European Asian session the day before. So the market's come up, it's broken through this little area. Yes, that could be just like, a UTAD style situation, a maximum pain towards a massive short. And the short certainly was on. Obviously, this is where I thought we'd find buyers back in the markets. And it's pushed to that extreme low and wicked straight up. And then pushed again to that extreme low and wicked straight up. Let's have a look at the smaller time frames now to think about how it's interacted with that zone. Here's just the 1 hour. Now, the 1 hour, again, hasn't really shown us too much action. 36.60. Look at this. Look at these wicks. That's an interesting area, an interesting look in these markets. Let's have a look at the 15 minute. So we scroll down. So we've basically gone down, up, made some form of, supply. Some sellers have come in, down, up again. So does 36.60 hold the key again? This was a few days. It's like deja vu. Literally 3 days ago or 2 days ago, we were talking about 36.60 and a break being bullish. Well, it seems to be that case again. We've got a market that looks like it does kind of want to go long, even though it's horrific, and I understand it's very bad looking. We've got resistances in the future, of course, at 3,700, the supply there, and then we've got that 3,720. If you're somebody that just wants to have pure patience and doesn't want to get involved in this and would rather either buy capitulation if we go low and just keep slamming off, or would rather buy once we get some actual real confirmation up here, yeah, you could definitely wait it out here. This is the kangaroo trappy, but we are near the lows. We've seen some wick purchases. Do the buyers come in, or is that just hopium? That the bottom time frames do look slightly more bullish. Let's have a look at the Qs here. Let's look at the Nasdaq. The Nasdaq made a new low on the real market, then instantly rejected that low. you can see the volume recently has been fairly large through this little trap. Now, Wyckoff has a law, and his law says that basically if the law of effort, if we do end up seeing a base, if that holds a lot of volume, often it can show us the hand of the market. That is, that there is some sneaky purchaser behind. We're at an extreme low. We know we're far away. We know we've left a lot of inefficiency gaps and all these other things. Again, there's a case to be made here for bullishness coming in. Now, the Nasdaq, again, we've got those really tight highs here, this 11.2. Do we put through that and actually move towards that next resistance zone, which sits in this area over here? Yeah, the Nasdaq made a new low on the futures market as well. So it's kind of like making new lows, but it's doing so very dully. It's not like bang and it's straight through. It's kind of bang and then it's finding buyers. It's finding buyers. Again, it's consistent with a very sneaky trap that could be setting up here towards the buyers. If you wish not to trade this, it's choppy. It's, kind of annoying. You probably can have good stop losses on it though. And at least you'll know that if it breaks through certain levels, you might be moving to the next zone. Let's have a look at the options chain. Coming into Friday, you'll notice 377 is now the max pain. That's down heavily from where it was at the start of the week. And the reason has to do with the puts that were here. A lot of puts closed off in the chain. 350 is the wall and 360 is a mini wall. So a lot of options closed and removed from the market ahead of what's going on here. The open interest is completely, a lot of it's hedged off. And as we go through into the 21st of October, the third week expiration, you'll still see 350 and 335 being those key zones. This is the one that you're really looking for max pain. Remember, every third week is the big one. That's the one you should be watching. What does Bitcoin have? Can we look at Bitcoin to show us risk on, risk off? Well, one thing's for sure is volume is up and transactions are fierce inside of Bitcoin right now and fierce inside of a lot of these markets. We do have some good signs. We've got wicks, we've got purchasing kind of looking like it's coming back in. We do know we've had a monster supply. We were correct, of course, talking about that being a huge short level, and it still remains the short zone, that 20,000 kind of 200 to 600 range is where we find sellers. But Bitcoin has held up well over the last 24 hours. Is that a good sign for the markets? It's decent. I'm still going to set alerts underneath this take though, because I think that's going to be critical. So if we get underneath this 18,000 zone, it's going to be potentially really horrific for Bitcoin. I will have a special coming out sometime over the next couple of videos on Bitcoin and my expectations from it long term. If you haven't already, come and follow us at FX Evolution, join our Discord community, the public, or of course the 7-day free trial over on our website if you're interested in joining to our private streams. And do remember, 1 hour before the market opens, we've got the core PCE price index. Maybe this is a catalyst that can send us up, or of course, maybe it's horrific and it will send us straight back down. We do see the signs of small buyers coming in near this support. Hopefully they can hold it over the next 24 hours. And do remember, guys, the sponsor of today's video is Tiger Brokers. They have a special promotion for the Australians out there in our community. But do remember, today is the last day to claim your extra 30 zip stock. If you open an account today and fund it with over 1 cent, you'll get 20 zip plus an extra 30 zip that'll be manually applied for being a member of course, the FX Evolution community. So remember to subscribe, smash that like button, and if you enjoy the content, I hope you have a great day. Bye for now.